Introduction, I won't take much time. Very quickly. This is the weightage in the examination is for 50 marks. Companies Act, right? Now onwards, the Companies Act, I will write like Companies Act 20. The Companies Act consists of this introduction. Date came into 29th. The first time it was enacted by. And you know how to make a law? How the laws are made? Any idea is there? Well, I will tell you. The concerned ministry, at a union level, we have the different ministries are there. The concerned ministry has to identify the problem. Then bill has to be drafted, sent to the law ministry, but a ministry for law and justice. How to send a copy. Those people get an approval. Then bill is finally drafted, put into the cabinet meeting. In the cabinet meeting agenda, it has to be and should approve and present into parliament, first into Lok Sabha, then into Rajya Sabha. Once these members were approved, copy will be sent to the president for consent. Once the president is consented, means accept. That is called president signature. Is consented means legislation ready. Fine. Identify the problem. Simple understanding for us, Telangana issue is there. Division of Telangana. Last 60 years people are asking Telangana. Finally identified the problem. They said identify the problem, Home Department, Ministry of the Home identified and recommended to the Law Ministry. Bill was drafted, approved, cabinet meeting, then Parliament approved, then sent to President. President gave the consent. AP Reorganization Act ready. Legislation ready. What is the effective date? They said later, government has to notify. That is called Gazette. Remember, Gazette notification, official Gazette notification. Two concepts are. Gazette notification means central government. Official Gazette notification means state government. That's the difference. Notification is nothing but a Rajapatra. That's a final. Effective date is June 2nd. Here also, the president gave the consent on 29th August 2013 and notification was issued on 30th August. Accepted on 29th. 30th notification was released and the section 1 came into force. What is section 1? Preamble. Every legislation section 1 is preamble. The preamble came into force on the 30th and on September 12th, 98 sections were enforced and 143 sections were enforced on the 1st April 2014. Altogether, we have the 470 sections in the Companies Act 20. For us, not necessary, I don't see any question. Basic introductory pattern for you. Altogether 470 sections are there. This act is applicable to whole of India, including the state of the Jammu and Kashmir. Today, this law is applicable to Jammu and Kashmir also. And this act is applicable to, where this act is applicable? Companies Act is applicable to every company which is registered under the Companies Act 2013 or under any previous company law. What is the previous company law? 1862, 1956. Before the 2013, what was the previous law? 1956. When the first Joint Stock Companies Act came into force, 1860. 1860 to 1956. Under these laws also, in case our company got incorporated, it comes under the administration of the Companies Act 2013. Separately, you need not get registered. Fine. So, Companies Act is applicable to every company which is registered under the Companies Act 2013 or under any previous company. Second, this is applicable to insurance company, banking company, as well as the electricity supply and generation supply, AP Genco, AP Transco. Telangana Genco, Telangana Transco is there. Both the organizations come under Income Time Electricity Act. When you come to final, you learn the Electricity Act also. And other one is companies, and of course this comes under Electricity Act. And other one is any other company which came into force according to Special Act. What are example for Special Act? RBI 1934, SBI, UTI, LIC. So special legislation organizations came into force for them. And other one is any body, corporate, incorporated, time being in the force where the central government shall notify. So from time to time it is. Sir, why already Insurance Act is there, Banking Regulation Act is there, Electricity Act is there, then why again this company law? Remember, Electricity Act, if any provisions were not clear, they will follow Companies Act 2030. Insurance Act, any provisions were not clear regarding the management or remuneration, dispute settlement, if any points were not clear, follow company law. You may came into force according to Insurance Act. If your law is silent regarding any aspect, you have to follow again Companies Act 20. So compliance is part of the companies. For example, Electricity Act is there. They have to satisfy Electricity Act regulation as well as Companies Act regulation if the Electricity Act is silent regarding certain aspects. So this act is applicable to every company, banking company, insurance company, electricity company, or any special company came into force according to Special Act or government notified company. Fine. And here see Food Corporation of India, National Highway Authority of India, and all those come under the administration of the Companies Act. Of course, this is only a short title. Now onwards, Section 2 is the definition. Any legislation if you take, Section 2 is only definition. Now let us understand some important. Abridged prospectus. Originally it has to be discussed in the prospectus chapter. But still, here I am trying to give one example. Prospectus is always a lengthy notebook. In prospectus, Part A, Part B, Part C. Part A about company, Part B about present issue, Part C risk factor. We have to explain. A detailed note we have to give. The prospectus may consist of based on the size of the company, 150 pages, 250 pages, or 100 pages, note it is. Whether you make investment in my company or not, I don't know. For everyone, if I am keep on distributing the prospectus, the unproductive expenditure, then without prospectus, I can't ask the public to make investment in my company. They should know about my organization. Then only they can take a timely decision whether to make investment or not. So without prospectus, I can't issue the application also to the public. Then SEBI came up with abridged. What is the meaning of abridged prospectus? Means the salient features of the prospectus. Salient features means highlights. Brief highlights of the company's prospectus. Prospectus may be 250 pages. Every 250 paper, each and everything is not important. The salient features print on a piece of a paper along with the share application, how to give it to the public. That is called abridged. Nothing but a condensed form. You remember your school days also, they will give the 250 pages, one paragraph. Read and understand, condense into 100 pages, mean 100 words without reducing the meaning, without changing the meaning. We used to have precise writing, something like that. Same. Prospectus is not there here. According to SEBI, no company can issue the prospectus application or rather share application without prospectus. Then prospectus is expensive. Then they come with abridged form of a prospectus. In the types of the prospectus, this is one type. Prospectus, abridged prospectus, deemed prospectus, shelf prospectus, red herring prospectus. 5 points. Here we are talking about here abridged prospectus means condensed form of a prospectus. Just salient features, highlight. After watching one movie, what are the highlights means? Hardly 4 or 5 points you can. Isn't it? Here also. After reading one good book, what are the highlights means? You can summarize it. Here also. Very important points we have to abridge. Let us see there. Memorandum containing the salient features of the prospectus as may be specified in the SEBI by making the regulations in this behalf. We'll take up again in the prospectus chapter. Next one is accounting standard. While keeping the books of accounts, we have to follow the accounting standards. Applicable accounting standards we have to follow. Auditor must certify that while keeping the books of accounts, all applicable accounting standards were meticulously followed. There is no departure, deviation from the accounting standards. Like inventory valuation, as we know, is whether followed or not, auditor has to certify. In case of accounting standards point of view, recommendations were made by ICAI, approved by NEFRA, National Advisory Financial Authority. Earlier, there was a different authorities were there. In the 2013, they made a NEFRA. They have to approve it, and the government of India gave the sanction. Then accounting standards we have to follow while keeping the books. Section 133 of the company. While keeping the books of accounts, all applicable accounting standards we have to follow. Followed or not, auditor has to certify. If there is any departure, give a qualified OP based on the what is the quantum of effect on the profitability. He has to check that and give a report on that, right? And in accounting, much more. You will learn this point, and here only I am giving. Accounting standards of accounts are nothing but any additions were made from time to time. Under the company or various classes companies referred under section 133. Section 133 of the Act deals with the central government to prescribe the accounting standards. As per this, central government may prescribe the standards of accounting or any addendum thereto recommended by ICAI under section 3 of the ICAI Act 1949 in consultation with after the examination of recommendations made by NEFRA, National Financial Reporting Authority. So here is a hierarchical levels verify. First of all, accounting standards were drafted by ICAI, referred to NEFRA, and it will be recommended to central government. If a government gave the consent, go ahead. It is applicable there. And according to section 33 of the Act, Read 7 with the Companies Act Rules 2007, the standards of accounts as specified under the Companies Act 1956 shall be deemed to be accounting standards until accounting standards as prescribed by central government under section 130. Means before the 133 came into force, under Companies Act 1956, what all accounting standards were there, those accounting standards company will follow. But it is not necessary this, honestly. Because 2013, 2024, almost 11 years. I don't think it's still to be there. They can delete all these things. And they can minimize it. The size will come reduced. And other one is earlier we got a different authorities and see National Authority Advisory Authority previously. Now we have a NEFRA. Earlier we got a National Advisory Authority should used to give approval according to section 210A of the company. Not a necessary one for knowledge sake, you can learn it out. Definition part is enough, and I don't think alteration, I don't think need to be changes. What is the alteration? Remember, law got amended, Companies Act amended, CRP amended, titles have changed, CPC title has changed. What is amendment? Is the meaning only. Amendment meaning also. This is the meaning. Remember, additions, omissions, substitute. Something was added, new words are added. Some existing words got deleted. some substitutions were made in place. That is amendment is nothing but alterations. Some changes were made. Memorandum of association can be altered. Articles of association can be altered. Altering, we are changing. What we are changing means we are adding something to the MOA. Objective clause is there. We are adding the new objectives. Or omission. Some of objectives of the business was outdated. We are deleting that and substituting with the new words as such. So, addition, omission, substitution, nothing but alteration, because in the due course we come across registered office can be altered, objective clause can be altered, capital clause can be altered. Alteration, wherever you come across this word, the meaning of alteration should come into your mind. Next one, of course, articles of association. You see the definition will repeat again in the AOA. In the incorporation process of a company, there are two important documents. One is the memorandum, other one is articles of association. Memorandum is meant for external management of a company. Articles are meant for internal management of a company. So in case of articles of association, it is a originally framed, means drafted. If you want to draft AOA, what are the requirements? AOA means articles of association. If you want to draft the articles of association, we have the table F, E, H, I in the Companies Act, there already. If I want to draft a memorandum of association, table A, B, C, E, 5 tables. If I want to draft articles of association, I have the table F, G, H, I, J. Which company should follow which table in articles of association? Discuss time being. Okay. Is originally framed, means originally drafted and altered from time to time. Nothing is fixed. Articles of association originally consist of 91 regulations. 91 regulations are there. Each regulation, remember, rules and regulation. Regulation is mandatory. Must and should we have to follow. Rules may follow, may not follow, fine can be. And alteration of the regulation means always it requires a special resolution. A special resolution requires a 3/4 majority of members attended at a meeting should agree for our proposal. 3/4 agreed, then only resolution can be passed. And explanatory statement is compulsory. Whenever company is passing a special resolution, explanatory statement, what does that mean? Explaining reasons for this alteration. I must give the detailed note on that. Why do I want to change this? Give a detailed note. So I repeat, guys, here. Second ones, it is originally framed, altered from time to time, and applied pursuance of the previous company law or under the pursuance of this law. Means it can be changed. Your articles of association can be altered. How to alter? Any regulation, any clause in the articles of association would like to change, it always requires a special resolution. Any clause, it is always a special resolution. A special resolution requires a 3/4 majority of the members attended at a meeting and agreed for the proposal. So finally, each special resolution should follow one explanatory statement, explaining the reasons for passing of a specific resolution as such. Another one is associate company. These are the types of company, one of the definition. Associate company. Associate company, see here, first time they gave a definition in the 2013. Earlier we don't have the associate company. First time it came into it. In relation to any other company means a company which that other company has a significant influence but is not a subsidiary company of the company having such influence includes joint venture. What is the significant influence? 20% or more paid up capital. 20% of the paid up capital on my name. Means I have 20% of the voting rights. Significant influence. While taking the decision, my vote carries weight. So I got a significant influence, but I am not a subsidiary company. A subsidiary company is always controlled by holding company. What all the directions given by holding company, subsidiary company has to follow. In this case, myself is associate company. I made investment 20%. 20% voting rights are there, and I am able to influence the decision. I got a significant impact over the decision making. So if I am supporting, it may be passed. If I oppose, this is not passed. I am able to influence the decision. Myself is called. See here. Significant influence means at least 20% of the total voting power or control or participation in the business decisions under an agreement. 20%. Quantity, not ordinary amount. 20% of voting rights with one person. If I join hands with the remaining people, at least I'm able to influence the decision. I can change the organization policy also. And joint venture, of course, here includes this, including the joint venture. Here, joint venture means a joint arrangement whereby parties that have joint control of the arrangement have been right to net assets and arrangement. Nowadays, we are seeing two companies are coming together, start one joint venture with a view to grab the market opportunity. Those joint ventures also included in the meaning of your associate. An example was given here, clarification was given by the nothing but the 20% stake under the fiduciary. What is the fiduciary? Trust and confidence. Under trust and confidence, if any person made investment, that is not comes under the 20% stake. Generally, in case of a chit fund business, this will happen. I have lifted the chit fund. I am a member of the Margadarshi, assume. Other the Sriram chit funds are recognized or unrecognized. I lifted the chit to 10 lakh rupee cash is there. The chit management contacted me. You redeposit in our organization, we will pay more interest. I have trusted them. I made investment of 20 lakhs. I am not associated. 10% 10 lakhs invested, assume I got 20% voting rights. Myself is not a associate company. So investment was made only to have a security for my money. That's it. Because I trusted them. Nowadays means banks are their olden days, and at the village had people used to deposit their money because they don't have the proper lockers also. They keep the money for the days. Nowadays means facilities were. Under trust and confidence, if any money was deposited, that person won't be counted as a person for this purpose. Now, auditing standards, while keeping the books of accounts, accounting standards we have to maintain. While doing audit, SCA standards on audit has to be. That is also given by ICAI under 143 of the company. Auditing level, here I am not auditing. Nominal capital, of course, authorized capital. This is the maximum capital of a company at the time of incorporation. Later, if you want, you can increase our capital. If you want, you can decrease our capital. Alteration of the capital is allowed. Alteration of the capital requires ordinary resolution. Always keep this word into mind. Many times application-based questions are coming on this head. Students are blindly writing as a special resolution. Alteration of the capital class requires only ordinary resolution. Ordinary resolution requires a simple majority. 51% or more members agreed for the proposed resolution can be. So here this authorized capital means the maximum capital of a company at the time of incorporation. With how much capital your company getting certificate of incorporation. Based on that, you have to pay the tax liability to the government. For that sake, they start with the limited liability. Whenever you want, you can go for increase the capital, further capital, rights issue. If you want to go for reduce it, reduction of the capital, we have the procedures under the company. Fine. And other one is board of directors are about nothing but the management. As we know, in case of a company, there is a diverse ownership and management. Management lies in the hands of board of director. In case of OPC, one person company, one director. In case of a private company, two director. In case of a public company, three directors, minimum directors. Maximum directors were 20 or 15. Maximum directors were 15. In case if you want to appoint more than 15, a special resolution is necessary. That is generally mean. You can appoint any number. We have a management and other thing. We'll discuss the directors are right. Board of directors meant for the overall control over the affairs of the entity. The collective body of the directors of the entity. Of course, body corporate and corporations, an artificial person. Books and papers. Now remember here only one point I would say. 1000 or more shareholders are there. We have to keep the books of accounts on e-records. Electronic records we have to. 1000 or more shareholders are there. How to keep the books of accounts electronically. No book paper. Less than 1000 book and paper. 1000 or more electronical you have to keep the records. What is the books and paper? Or book or paper includes your books of accounts, deeds, vouchers, writings, documents, minutes, registers maintained on a paper or electronic. Fine. Other one is books of accounts. This is to be remembered. It will follow you for many years to come. What are the books of accounts? BOA. All the sums received expanded by the company in relation to receipts and expenses. Total receipts, total payments, more or less, our cash book. Second one, all sales and purchases of the goods and services by the company. Third one, assets and liabilities of the company and other cost item. Remember, 148 Companies Act, section 140. 148 is the cost audit. Cost audit is not mandatory for all the companies. Where there is a manufacturing, processing, mining activity are there, where there is a production, processing, mining activities are there, cost audit is compulsory. When cost audit is compulsory, cost accounting records we have to maintain. Apart from these three plus cost accounting record, utilization of the material, utilization of the labor, because cost sheet we have to prepare, cost structure for that sake. So here, otherwise these three books of account. Receipts and payments account of total sales and total amount received, receipts and purchases made, and finally assets and liabilities of entity. Fine. And cost accounting records are not compulsory for all entities. And in case of the company where it belonging to class of the company specified under this, there was a monetary. There was a list of the entities were given. Almost 39 establishments are there where the cost audit is mandated. Mandate. More or less almost all processing from production unit. And the monetary threshold is that 50 lakhs or 100 crores. There. The conditions were satisfied. Cost accounting records so you have to maintain, otherwise not necessary. And of course, branch office. Any establishment described by the company. Called up capital. I think all of you know authorized capital, maximum capital of a company at the time of incorporation. What is issued capital? A part of the authorized capital issued to the public capital. Called up capital, the board of directors called to pay. What is the meaning of call on shares? Any idea? Call on share. Call on share means demand to pay. Demand. What should be the application money? Nominal value 10 rupees. What should be application money? What should be application money? I don't know. You have to say. What should be application money? How much I should call on application? On allotment, on first call, on final call, something like that, you know? Tell me. What should be application money? Say something, right or wrong. I am not giving any reward or award for you. Hello. Please tell. According to Companies Act. Oh, you mean to say according to company's discretion policy. Fine. Tell me how much. Yes. 250? 2 rupees 50 paise. 2 rupees. Okay, 2. In accounts, you come across like this. So you are saying that. No, Baba. So what should be application money? Remember, according to Companies Act 2013, not less than 5% of nominal value of the share. According to SEBI, it is not less than 25% of nominal value. Sir, which one I follow, man? 5 or 25 or 25. Companies Act only permitted issue of the shares, debentures, acceptance of deposits, follow SEBI guidelines. So what should be application money? 25%, not less than 25% of its nominal value. Companies Act said 5%. But contradiction is not there, not there. If they say SEBI less than 5%, contradiction will come. They said 525. 5% satisfied, no? There is no contradiction between two legislations also. Right? Okay. So called up capital. How much money they have to pay? See here. Such a part of the capital which has been called for payment. Who will call? Board of Directors has to make a call. And charge. We have separate chapter there. Charge is nothing but there are two charges, one type of mortgage. There are two types of charges are there. Fixed charge, floating charge. Fixed charge means on fixed assets of a company, if you create any charge, it is called fixed charge. Floating charge, the assets which are constantly fluctuating. Present assets as well as future assets, charge can be created. Present asset as well as future asset. So when charge is created, that is called fixed charge and floating. And the procedure for the registration certification, we will see in the due course, guys. And here verify, charge means an interest, lien. Lien means retaining until payment is made. Lien created on the property or assets of the company or any of its undertaking, both security including mortgage. The word mortgage is for immovable property, pledge is for the movable property. The company law, there is no question of the pledge. They take the word only mortgage. They take the word charge. The charge may be fixed charge, floating charge. We won't come across the word pledge or mortgage, the words usually they won't take. They take the word either fixed charge, floating charge. Fixed charge means fixed assets of a company. Floating charge means on the assets which are constantly changing. Best example, stock and trade. Minimum stock, maximum stock, reorder, danger level, again maximum stock, keep on fluctuating. On that stock, if you create any charge, that is called floating charge. Of course, CA. Tomorrow's CA. Any person who is a member of the ICAI with COP as such. And CEO, CFO, company. Now, originally I will start from this definition. Since it is there in the material, just I am reading out. What is company? See the definition. According to section 2, subsection 20. Any company which is registered or incorporated under the Companies Act 2013 or under any previous company law. What are the previous company laws? 1860 to 1950s. Here one example given, verify. RIL came into force in the year 1973. It was registered under the Companies Act 1956. Another one is Tata Steel. 1907. Again, this is not 1956, prior to that. Other one is, this is incorporated Infosys according to 1981, 1956. Any company which is registered either under the Companies Act 2013 or under any previous company law, they all come under the administration of the Companies Act 20. This definition you have to learn it. Company limited by guarantee. There are two types of companies are there: limited by share, limited by guarantee. See here, limited by guarantee, important and examination point of view. Section 2, subsection 21, company having the liability of its members limited by memorandum to such amount as the member may respectively undertake to contribute to the assets of the company in the event of being wound up. Let me put this one other way. Company limited by share, limited by guarantee. What is the limited by share? Next point is that only. First we will discuss that, then come to limited by guarantee. Nominal value of the share 10 rupees. On application 2 rupees 50 paise. On allotment 2 rupees 50 paise. First call 250, final call 2. This way they have to pay money. We have the three shareholders, say X, Y, Z. What is the nominal value of the share? 10 rupees. For all three of you, 10, 10, 10. And what is the paid up capital? He paid 10, he paid 8, he paid 6. What is the unpaid capital? Here it is nil, here it is the 2, here is the 4. Now company closed. What is the liability of these persons? Limited by share means the shareholders' liability limited to the extent of unpaid amount on the shares held by him. Unpaid amount. What is unpaid amount of Mr. X? 0. Liability also 0. Unpaid value of Mr. Y 2. 2 into how many shares? 1000 shares. Your liability 1000. Mr. Z, unpaid balance 4. How many shares? 100 shares for 100 rupees. Outset, these two guys were multimillionaires. They need not pay their money. In a partnership, partner's liability was unlimited, joint and several. Whereas in case of a company, the shareholder's liability may be limited by share, limited by guarantee. Limited by share means shareholder's liability limited to the extent of unpaid amount on the shares held by him. Limited by. Very frequently we come across this line in the Companies Act. Limited by share. Remember, interview also equally important question. Next one is the limited by guarantee. Amount of guarantee given. Amount of guarantee given over the assets of a company. When I become the member of a company, I gave the guarantee. For example, we have the three shareholders in our company, Mr. A, Mr. B, Mr. When he became the member, he said, if any liability arises, I will pay 10 lakhs. Mr. B said, I will give 1 crore. Mr. C said, I will give 20 crores. Liability becomes certain. Then what is the liability of Mr. A? 10 lakhs. Amount of guarantee given. What Mr. B said, 1 crore. Liability limited to 1 crore. Mr. Z said, I'll give 20 crores. Is liability limited to? Amount of guarantee given over the assets of a company. When we become the member, we give a guarantee. Generally, when it will happen, Section 8 company. Section 8 company objective is a service mode. There is no element of the profit. Then members will give the guarantee. If any liability arises, I will pay this much. For them, money is not necessary. Today, Ratan Tata needs money. Yeah? I don't think so. And Dhirubhai Ambani, Mukesh Ambani needs money. Yeah? No. They have crossed certain lines. Now they don't want any money. And Mr. Narayana Murthy needs any money. Yeah? Other Shivakumar Nadar needs any money. Yeah? No, these guys want a service motive now. They are into next level of the life. They become the member, already financially stable. What they say, we'll start one Section 8 company. We do some service. If any liability arises, I will pay this much, I will pay this much, I will pay. Amount of guarantee given. And here itself, if you permit me, I will explain one more point also. For example, company limited by guarantee. Your company limited by guarantee, right? With share capital, with share capital, without share capital. Company limited by guarantee, with share capital, without share capital. Without share capital, amount of guarantee given. That's it. Just to pay that money. No capital, na? Whatever the guarantee amount is there, you pay that money. Enough. Second one, with capital. In this case, here we have three shareholders like A, B, C. What A said, I will take up 1 lakh shares at the rate of rupees 10 less guarantee for 1 crore. He said, I will take up 1 lakh shares at the rate of rupees 10, I give a guarantee for 20 crore. He also said, I will take up 1 lakh shares at the rate of rupees 10 plus 20 crore. Now liability becomes certain. Then what is the liability? Please remember, when company is a going concern, when company is a going concern, the shareholders' liability is limited by share. To be remembered. When company is a going concern, means company going on for indefinite period of time, then their liability is limited by share, means the unpaid balance on the shares held by them, they have to pay. Sir, when this guaranteed amount they have to pay, in the event of winding up of a company. Until that, this amount they need not pay. Here no capital. Here no capital, so that guaranteed amount, whenever they demand, they have to pay. Whereas, I have the share capital as well as guaranteed amount. Share capital is there means my liability limited by share. When I have to pay this money, whenever company call, I pay this money, that's it. Generally, according to SEBI guideline, from the date of allotment of the share, within the 1 year, the share must become fully paid up. So within a short span of time, total amount was paid. When the company is a going concern, I have to pay only unpaid balance on the shares held by me, means limited by share. The guaranteed amount I will pay only in the event of winding up. Until that, I need not pay this much. Am I making sense? So both were not one and the same. So in the examination, this point specifically we have to state. Limited by guarantee companies are two types. One with capital, other one without capital. With capital means shareholders' liability again divided into two. One is limited by share, other one limited by guarantee. Limited by share when company is a going concern. Limited by guarantee in the event of winding. And without capital, limited by guarantee. Whenever company demanded, I have to pay that money. In the types of company, we'll debate this point again, it will come. Fine. Okay, guys. Limited by share, limited by guarantee, both the points we know. Contributory, this is too early to discuss because winding up of a company, contributor list we have to prepare, the unpaid balance, who are the contributors towards the company, and company is winding up. And control I don't think this is also not much important and only understanding purpose. Control includes right to appoint majority of the directors, control for the management, policy decisions exercisable by a person or persons acting individually or concerted means together, either directly or indirectly, including virtue of their shareholding or the management rights or shareholders agreements, voting rights agreements, or in any other manner. Holding company, subsidiary company meaning, if you remember, you understand this control. What's the meaning of holding company? In simple, holding company is one which is having a hold or control over the affairs of another company. When I am able to control other company, if I take the majority of the stake of other company, 51% or more paid up capital of your company, our company acquired. Then definitely now onwards our company has to work according to my directions. Because majority of the directors are appointed by me, or your policy decisions are controlled by me. Managerial, administrative, technical, policy decisions of your company I will determine. The 51% may be directly by individual alone or together. I have the 4-5 friends are there, all of us together we got a 51%. And you can have a control over the fights, your production strategy, marketing strategy, and policy matters, everything we will determine. 51%, more than 51% directors also I will appoint. Total management lies in our hands. Thereby control. Control may be appointment. How to become a holding company? By taking the majority of the paid up capital. Second one, composition of the board of director. Majority directors of your company appointed by me. Now onwards our company has to listen whatever I say. Of course, debenture. Again, this definition equally important. We have debenture chapter is there. Debenture, see, interesting, and this is no definition verify. They won't give the definition properly. Take it. Debenture includes, first of all, what is debenture? Debenture includes, they say, debenture stock, bonds, or any other instrument as the company evidencing the debt or constituting a charge on the assets of the company or not. And provided, of course, this is an instrument referred, so on and so on. First of all, debenture stock. What is the difference? Like a share and stock. Is there any difference? Tell me. If you know that, you know this also. Because both are replacing the words only. Share and stock, debenture stock. The share may be either fully paid up or partly paid up. What is the proof? Share certificate. Once a certificate is given, your name will come into the register of members. You become the registered member of a company. Stock. A fully paid up share is converted into stock. A fully paid up share is converted into stock. Your articles of association authorized. Directors has to pass a special resolution converting existing fully paid up shares into stock. Now company will issue the share warrant. A share warrant is a negotiable instrument under the Negotiable Instruments Act 1881. Once a share warrant is given, your name in the company will be automatically struck off. The stock is transferable just by delivery. Registration with the company not necessary. In a day, in a team, n number of times it is transferable. Where the share certificate was not like that unless it is in a demat. Unless it is in a nowadays they are reducing T+1. Now they want to settle the transaction on the same day. I don't know how many of you reading the Economic Times. Earlier, Share transfer was T plus 2. Transaction day plus 2 days. Later reduced to T plus 1. Now they wanted to see on the same day it has to be done. Otherwise, people are playing the game in between the true transfer days. No one is taking the delivery. They are selling, the short selling is there. The next day some increase by 1 rupee, 2 rupee, 3 rupees also. People are again selling. Hence, without making single pie investment, just shares are purchased. Without taking the delivery, you are again selling. You are making the profit out of it. Share market now. People are there, wise people, and no investment, no single pie investment. Just they buy. 2 days a T plus 2 means 2 days a transaction. Within the 2 days, even 1 rupee increase, all this dispose. Where is my investment? Zero. They are making money out of it. They said now SEBI is working on that. On the same day, transfer has to be done. Because nowadays everything is decentralized. You need not wait to application and all. The one click is gone. What is the need? You have to wait for again 2 days or 1 day. On the same day, transfer it. Funds has to be transferred. Like a Google Pay is there. You click it, money transferred. You do it like that only. Why you have to wait? People are there working on that. Probably we may come across that. Okay, debenture also same and meaning. Debenture may be fully paid up or partly paid up. Debenture stock is always fully paid up. A debenture may be either secured debenture, unsecured debenture. Hope you know types of debentures. Secured, unsecured, convertible, non-convertible types are there. Here also first debenture, second debenture, something as such. Director dividend documents. This you remember. Document important again. Because service of documents, one chapter is there in the due course. That question was expected, unexpected question in the CA examination only, especially he is asking in the examination. Others like a CM and CS, hardly one question we can see on that. But in CA examination, this question he was asked. Service of documents, one chapter is there. You come across in the thereby. First of all, what is the document? See there. If you want any meaning, please raise your hand. Summons, you know meaning? Summons means notices. High Court will send a summons to you. Court will send a summons. Authority will send a summons. Okay? Notice, requisition, order, declaration, form and registers, whether issued, sent, kept in a pursuance of this act, under any other law, time being in the force for otherwise maintained on a paper or electronic documents. Employee stock option, ESOPs. Any employee who has completed 4 years of the continuous service in a company is eligible to get a ESOPs. Of course, company policy may be different from according to your AOA. According to company law, you are eligible for continuous years. But you should be a permanent employee. That's a condition. He should be your name is there on the muster roll of establishment. 4 years of the continuous service is completed and you are eligible to get a ESOPs. Employee stock option scheme. It can be offered. It is the option given to the directors, officers or employees of the company or its holding company, subsidiary company or companies, if any, gives such directors or officers or employees the benefit or a right to purchase, to subscribe for shares of the company at a future date at a predetermined price. 4 years completed. We are allotting the shares for you today. Today we are allotting the shares for 100 rupees per share. Money you have to pay on so and so date. And as on that date, what rate is prevailing, that rate you have to pay. Because you are locking the employees or directors for at least for next 1 more year, 2 more years. They will work for organization. Intention is you become the owner of establishment. The field would be something different, isn't it? And Satya Nadella, he will get a salary plus stock option. Is the stock option only 4,500 crores? Not salary, only shares. Money, salary won't be crores of rupees, thousands of the crores, nobody will pay. They will give the shares. In share amount only, huge money they will get. But lock-in period is there. 3 years lock-in period. Once employee stock option you got, next 3 years you can't sell it. After 3 years, you can sell you want. Like that, conditions will imply stock option. And expert, this is important. In the prospectus chapter, we come across this meaning. Expert has to sign the prospectus, stating that this prospectus doesn't contain any misleading statement, untrue statement. There is no active concealment of the fact. Expert has to sign. Expert signature is must. Who is an expert? See there, engineer, valuer. Registered valuers are there under the Companies Act 2013, section 247. And chartered accountant, company secretary, cost accountant, or any other person who has the power or authority to issue the certificate under pursuance of any law for the time being in the force. If you see the previous question papers, so this expert definition itself was asked for short answer. Expert define 4 marks or 2 marks question. There this is important. An engineer, valuer, CA, CMA, CS, or any other person has a power under any authority to issue the certificate of time being in the force, of course. Now, this is again very, very important from examination. Financial, very frequently come across this vocabulary, right? What are the financial statements? Balance sheet. What's the purpose of the balance sheet? What the balance sheet reveals? Financial position of the entity. Fine. Profit and loss account. It reveals net profit or only profit. Net profit or net loss, whatever. In case of a company carrying on the activity not for profit, income and expenditure, section 8 company, they have to prepare receipts and payments account, income and expenditure account and balance sheet. And cash flow statements. Statement of change in equity. You are a promoter of company. The promoter transferred more than 10% of the shares acquired by him. That has to be reflected. Promoter should continue. Why are you selling your own shares? Your company doing well, you want to transfer the shares. Some people are there, promoted the company, created the artificial boom in the market, encash, and they may disappear from the market. The investors are the losers. Thereby, SEBI imposed this conditional statement of change in equity held by them. You have to reveal it. And any explanatory note, whenever you pass a special resolution, I told you explanatory statements are compulsory. Detailed clarification why this resolution is being passed. Financial year, of course, commencing from 1st April, closes with 31st March. Commencing from 1st April, closes with 31st March. Originally, Modi was planned to change it from 1st January to 31st January in December. Somehow it was not materialized because globally different accounting, the financial year they are following, we follow the different accounting year. They got a thought process, later I don't know what made them, they have stopped that. Originally there was a plan. I think all of you know this one. Only for later part again I will explain. Here I am giving some clarity. Any company incorporated before 31st December, any company is incorporated in between, rather I say 1st April to 31st, in between. Their financial year ends by 31st March next year. Okay? And within the 9 months, they have to conduct the first AC. What about a company incorporated after 1st January 2024 to 31st March 2024, last 4th quarter, after 1st January to 31st March, in between any company incorporated, their books of accounts also will be closed by 31st March, but only 3 months. So here is here. 9 months, no ACM. Then what to do? In the following financial year. What is the following financial year? 25th. The 31st March 2025. Your accounts you have to close, which means 12 months less 3 months. 15 months accounts were closed. From here onwards, 9 months. So please do remember in such a way, any company incorporated 1st April to 31st December, their financial year ends by 31st March, and within the 9 months, they have to conduct a first AGM. In case, if any company got incorporated in between 1st January to 31st March, they have to conduct their financial year ends by following financial. That was the definition given and here. In the examination, application based questions may come. The date of incorporation they will give. Accordingly, we have to assess when the AGM has to be conducted for that sake. Right? Let us see. Financial year in relation to any company or body corporate means period ending on 31st day of the March every year, where it has been incorporated on or after the first day of the January of the year, period ending 31st March following year, in respect of the financial statements of the company, body corporate is made. Provided where company or a body corporate is a holding company or a subsidiary company or associate company is incorporated outside India, is required to follow the different financial year for the consolidation of accounting outside India. Central government may, on application made by company or a body corporate in such a form or manner as may be prescribed in the following manner. In this case, company incorporated outside India means, of course, any company incorporated outside India. So guys, next one, free reserve year not necessary for us, maybe for your purpose important accounting point of view. GDR I will discuss for you in the company law prospectus chapter, and IDR, GDR, Indian Depository Receipt, Global Depository Receipt. Indian Depository Receipt. Issue was opened in India, closed in India, IDR. When you are going for a public issue globally, you can go with GDR. We'll discuss in the due course of time. So far in India, only one company issued with the GDR, that is Reliance Industries Limited. And means any instrument in the form of a depository receipt, whether called as a created by a foreign depository outside India, authorized by a company making an issue of a subsidiary, depository receipt. It needs some little clarification and explanation. GDRs will discuss in the due course. Any issue made in India closes in India, IDR. Any issue made globally, you can go with GDR. You remember that much time being, we'll see the remaining later. This is again very important from examination point of view, government company. What is the government company? Can you, anyone? Already you have seen the definition. Government company, any guess? Wild guess, tell me. I am listening. Whatever you say, I will write. Shares are held by government. Government means central government, state government, or partly central government and partly state government or state governments. According to Sindhu, 51% or more shares of any company held by government. Government means, she said, central government or state government or partly central government, partly state government or state governments. No? Why no? Navya. If you write like this, you will get 0, my dear. This question, that's why they will go repeatedly. Students will write 51% or more share capital. They use that language. Here share means what? Authorized capital, issued capital, subscribed capital, called up capital, paid up capital, uncalled capital, reserve capital. Which one, Baba? I can make any assumption. There is no clarity. This is the definition. Repeatedly they give. Earlier I used to see the paper, every alternative examination or 2 or 3 examinations, you can say pakka one question government company. So why this simple definition? After evaluating papers, I understood, oh, our students will do blunder. If I evaluate the 350 papers, at least 200 papers you can see as like this end. Trust me. Not that they don't know answer, they know, but excitement. I know this definition. He will do mistake. See this. Okay, anyway, 51%. Not local government, please. No local government is in examination. Important. In case of a government company, auditors were appointed by COG, Comptroller and Auditor General. The scope of audit is defined by. See here. Not less than 51% of the paid up share capital is held by central government alone or by any state government or governments, or partly by central government or partly by one or more state governments, including such subsidiary company of government company. Allowed. One time one question was asked like this. In a C intermediate question paper, this central government 26%, Andhra Pradesh 10%, I am changing the words, Telangana state 10%, Karnataka 5%, this government company because 51%. What if this 5% held by LIC? That was asked. 5% held by LIC, 5%. Total 51%. Is this a government company? Referring to provisions of the Companies Act 2013, explain. What do you say? Yes. Reason. No reason. Go with the argument. Because you have to reason, you have to write. No? Otherwise, how can you get a mark? Tell guys. When you say yes, you have some logic in your mind. When you say no, you have some logic. After watching the Salar movie, people said, wow, super movie yaar. When I watched it in the recently OTT, I got headache. Why did I see this movie? Salar. What is there in that movie? People saying, did you watch the Salar? I said, no. Oh, missing something in our life. People were looking at me. Recent OTT, it was Netflix, I watched that movie. I didn't see. Felt boring. Nothing is there. Violence is. People are questioning me that time. Didn't see that movie? No. Maybe I'm not testing their taste and all. Maybe differ from person. Yeah, finally conclude. I have judgment, na. I thought, arey, kya violence hai bhai? Meaningless violence. That names I can't remember. Peculiar titles. Anyway, somebody said, a super movie yaar. One person I watched it 4 times. Great. The judgment is different. That's why. Yeah, tell me. You said yes, reason. There are. Government is there all together. Central government, state governments are there. LIC handled by central government. Hence it is government, you mean to say. Okay? Yeah. No reason, bolo. LIC controlled by central government. Hello? What without central government permission, can they make investment? Tell me. Can they make investment without government permission? Tell me. Yeah. No. No. Tell the reason. LIC is not a government. Controlled by government only, na? Not a subset. Subset is different. If that is the case, Government of India is the holding company. Then LIC becomes subsidiary company. Of course. Okay, like from that point of view you are saying. Okay. What do you say, guys? Why no? Why no? Why no? Quickly. Don't take too much time. Well, no. Navya? No reason. You don't know reason. But answer is no, you don't know logic. Okay. Amma? Bit louder. Louder, Ray. Not working. Otherwise I go to doctor. I'll get a doubt. Unnecessary doubt you are creating on me. According to IRDA instruction. Okay. Mere silence is not acceptance. I think all of you know. Acceptance chapter. Study it now. Answer is no. Why? Because what was the definition? 51% or more paid up capital is held by central government, state government, partly central government, partly state government or governments. Is LIC government? That's all. Definition only clue base for us. From the definition only interpretation. Since LIC controlled by government, undoubtedly. Controlling is different. No? They can't make any decision. LIC made investment does not mean that central government is holding shares, isn't it? The shares on whose name? LIC's name, not on the president name. Government of India made investment means on president name. State governments make investment on governor's name. LIC made investment on LIC's name. Thereby, this question was given for 5 marks. Answer is, it's not a government company. Right? Okay. Guys, next one. This is a government company definition. Please learn at home quickly. And one example also there. Read at home. Holding company, subsidiary. Holding company is one which is, in simple sense, to understand the concept. And holding company is one which is having a hold or a control over the affairs of another company. Subsidiary company is one which is being controlled by another company. How do we understand? I will take an example of X company limited, Y company limited, and Z company limited. There are 3 public companies I am taking. Today, X company acquired majority of the paid up capital of Y company. Then Y company is called subsidiary company and X company is called holding company. How to become the holding? By holding majority of the shares. Otherwise, composition of board of director means in X company, A, B, C, D, E, F, G are directors. Whereas in Y company also A, B, C, D, E, F are directors. In both the company, management is one and the same. If I have the majority of the stake, I can appoint major directors of other company also. So I can have a control. Control in 2 ways. One, by holding paid up capital or by holding composition of the board of directors. So X is a holding company, Y is a subsidiary company. Sir, what if already Z is a subsidiary company to Y? Z is a subsidiary company to Y. The moment Y company become subsidiary to X, that also will become subsidiary to X. Then how many layers were allowed? How many layers for holding company. Any guess? Excellent. Companies Act 2013, first time law came into force na in CA intermediate question papers. If you verify, you can see this question. And 2 marks they asked. How many layers were allowed? CA people and the latest amendments, pakka questions will. Immediate examination, 6 months before examination, what all the changes are there? They won't ask. They won't ask. 6 months before, it won't have any impact for you. Prior to that means up to December 31st. What all the changes were there? Those reflect in our exam. That is important. We have at least one or other question they will pose. Like other paper, other setters, these people were not there. They will ask latest trends in exam. Reflects the current scenario. Fine. Anyway, now one more question, guys. What if, sir, Y is a private company? Why private company limited? Why is a private company? X is a public company. Public company, holding company. Subsidiary company, private company. Please understand. The moment public company acquired majority of shares in private company, now onwards, this private company also called public company. It's called deemed public company. You need not change your incorporation certificate. Characteristics you need not change. Just you have to work like a public company. Are you understanding? So, a subsidiary company of a government company, assume if X is a government company, now tell me, what if X is a government company? X is the government company, holding company, subsidiary company, private company. Now onwards, this subsidiary private company also called government company. Excellent, government company. Sir, what about this? It got one tail. One private company, Y company got one subsidiary, na? Now Y company become deemed government company. What about Z? That also called government company? Yes or no? Yes or no? Jaldi bolo. Yes or no? Answer is no. This status is given only to subsidiary company. That's it. Not for their subsidiary companies. Understanding? You go through the question papers and you see application based question on this. One government company, subsidiary company also called as a government company, but subsidiary company to government company is not a government company. It works like a public company only. That's it. You won't get a status of a government company. Am I clear? We see remaining in the next definition, guys. We'll complete tomorrow. Maybe it won't take much time. Remaining definition. Start with the definition. Definition, characteristics. That chapter would be something different. We can discuss. Thank you. And welcome to the world of CA. Not easy. But once you got that magical word in front of your name, money comes like a tsunami. I'm using. I know one of our known chartered accountant. For his daughter's marriage, he spent 300 crores. Hello?